Hey, it's Clay, and this will be a video chart on ticker symbol HEB. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Did this analysis on Wednesday, so that is where the green and red line annotations are coming from. Before anything else, though, I'm going to do a little house cleaning, just get rid of these lines. Sure, those lines pertain, they're just not relevant right now, and from a presentation standpoint, I don't want to risk causing clutter and confusion because there's lines everywhere. So let's try to keep this as clean as possible. First update that needs to be made comes about based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So going into Friday, that first level of resistance in the near term is going to be that 18-cent mark right there. And you can actually see it's already been rejected a couple of times today after falling. The price fell back below it. You can see directly rejected right there, and then later on in the afternoon. So I'm not saying that the price can't break above 18 cents ever again. I'm just saying that, apparently according to the story that's being told to us via the chart, the price is really going to need to bring its A game if it's going to be able to not only fight above that level, but then stay up above it. In the event the price can fight through 18 cents, and the next key overall level to keep an eye on would be that purple line right there, which is the 50-period simple moving average. So keep an eye on that. However, as of right now, one priority at a time, and that first kind of near-term priority is breaking up above 18 cents. As far as levels of support are concerned, it's all about the pink line right there, the 200-period simple moving average, which is right now valued at 16 cents. And that's definitely a do or die must hold level. And I say that because let's say the price were to go down there and then break below it and then just continue on down. At that point in time, from a very literal perspective, you would have the price literally right back to where it started before the big move happened. And not to insult your intelligence, but price movements that go back to where they started, not exactly a sign of true strength or anything like that. In fact, that would essentially put the chart at pump and dump status at that point in time. And when you stop and think about the fact that, the price would have made the move all the way up there, and then all of a sudden within a time span of a few days gone right back to where it started. I mean, if that's not a pump and dump, I don't know what is. So we'll see what happens with it. But to be fair, the price can still have, does still have an opportunity to stay above that 16-cent mark. So we'll see if the bulls can get that job done or not. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.